I welcome you all. In this session, we shall understand the entire overview of this financial modeling course. So, if you have already decided that you are going to take this course, you can simply skip this session. And if you are still in the process whether to take this course or not, you can see the entire overview, and based upon you can finally take your decision. So in this course, we shall try to find out our financial model. Now, for our financial model, it depends upon our weighted average cost of capital and our projected financial statement. And our weighted average cost of capital depend upon our cost of equity, cost of debt. And our projected financial statement are our income statement, balance sheet, and cash flow statement. So we shall compute all these things. So we shall start our discussion with finding the cost of equity using Gordon's growth model. So we will prepare one Excel sheet which shall reflect the Gordon's growth model. Now, inside this Excel sheet, we shall find our dividend growth rate first. Once we have found our dividend growth rate, we shall find our cost of equity using Gordon's growth model. Once we have done the Gordon's growth model, we will find our cost of equity using CAPM model. And for CAPM model, we would require our expected return on market. And we shall find our expected return on market from these particular details. Along with that, we would need the beta, which means the systematic risk for any particular company. So we shall find the beta, and also we shall find the beta using different methods. Once we have done that, we shall simply find our cost of equity using CAPM method, that is our capital asset pricing method. Once we have found our cost of equity, we shall simply go and simply see our equity value for overall company. After that, you can see that we will find our cost of debt. For finding the cost of debt, we will go to our debt sheet and try to calculate it. After that, we shall model our tax rate, as you can see here. This tax rate shall be modeled. Once our cost of debt and cost of equity has been calculated, we shall go and find our weighted average cost of capital. So we shall go and find our overall weighted average cost of capital for our company Caterpillar Incorporation, as you can see here. Once we have done that, we shall simply go to our financial model. And inside our financial model, we already know that firstly, we would need historical financial statement and their ratios. For that purpose, we shall prepare our income statement, which is based upon historical details from the year 2016 to year 2020. This income statement shall be prepared based upon annual report. And similarly, we shall prepare our cash flow statement, which is historical details. And along with that, we shall prepare our balance sheet based upon historical details. And finally, we shall rewrite our balance sheet for our analysis purpose because we would need some rewritten items. After that, we shall go and analyze the sales for our company Caterpillar Incorporation. After that, we shall go and find our current assets to sales ratios and our current liability to sales ratios. Once we have done that, we shall find our operating cost to sales ratios for our modeling purpose. After that, we shall model our fixed assets for Caterpillar Incorporation. As you can see, we shall model the depreciation rate and our property, plant and equipment to sales ratio. After that, we shall model our dividend also. And once we are done that, we shall simply go and model our other long-term liabilities and pension for the company. Once we have done that, we shall do our tax analysis here also. And after the tax analysis, the remaining certain ratios about the company shall be calculated. Once we have done all that thing, we shall go to our financial model, as you can see. This whole financial model is pro forma financial model which shall cover all the major ratios for our projection. Now, we shall start our projection with our year 2021 and till year 2025. So, we shall project our income statement for the future 5 years, as you can see. We shall project our balance sheet for the next 5 years, as you can see here. And after that, we shall project our cash flow, which is free cash flow for the next 5 years, starting from the year 2021 to year 2025. And after that, finally, we shall find our intrinsic value of the share, as you can see here, the intrinsic value, which is 193.13. And once we have found the intrinsic value, our buy and sell recommendation can be given. And this whole report shall be presented in Microsoft Word format because our projections have been done in Excel. And if your client need these details in Microsoft Word report, we shall simply provide it in that report. So this shall be our overall structure and overall path. I see you in the next session from where we shall start our discussion. Till then, bye bye.